Hi, this is Mike Larson from Money and Markets TV. The search for a solution to the European debt crisis has officially entered the theater of the absurd. I say that because politicians and bureaucrats keep fumbling for a silver bullet that will contain the crisis, but ultimately the crisis is uncontainable. Just listen to the latest plan concocted by Eurozone officials and reported first by CNBC. Try to follow me here. Money from the European Financial Stability Facility will be used to help seed a special purpose vehicle backed by the European Investment Bank. That SPV would buy bad sovereign bonds from banks who would buy this SPV's own bonds and then use those bonds to get more money from the European Central Bank. Now, if that sounds like the messiest, most doomed to fail plan you've ever heard, you're not alone. But just a few hours after it was leaked to the media, things got even weirder. You see, the European Investment Bank, or EIB, historically has been what's called a development bank. Its loans have helped fund a medical center in Estonia, promote small business lending in Rwanda, and plant trees in Spain. Yet somehow, markets were led to believe it was going to switch its mission to buy sovereign bonds. And sure enough, within hours, the bank itself came out and said it had no idea what CNBC was talking about. In fact, it went a step further and said it will play no part whatsoever in any bailout. Like I said, absurd. So where's this all headed? What's the endgame? I believe the endgame will involve debt defaults, write-downs, bank failures, and market washouts. And we're getting closer and closer to that outcome every day. European citizens are already tired of all the bailouts and threatening to rebel against any more. They don't want to be taxed into poverty so bankers in other countries don't have to pay the price for making dumb investment decisions. The Germans in particular are worried that if they have to write a bunch of big checks to bail out the Greeks, the Irish, and everyone else, their own sovereign debt ratings will take a hit. Weiss Ratings already rates Germany a C+, much lower than the other major agencies. And that grade could easily slip lower still if billions and billions of euros in liabilities are added to Germany's balance sheet. Yet U.S. Treasury Secretary Timothy Geithner and Federal Reserve Chairman Ben Bernanke continue to push. They want Europe to do a big TARP-like program, giving away the store in order to save their fat cat banker buddies. But the problem is that the government's already spent all the money they had, and then some, to bail out private banks in phase 1 of the credit crisis. And now those same governments are under siege in phase 2, so they can't bail each other out. The money's gone. Folks, this is why I believe a day of reckoning is coming. A market collapse is inevitable. And as an investor, you have to ask, how do I protect myself? First, don't let hope guide your investment strategy. Deal with the reality in front of you. And in my view, that reality requires a straightforward course of action. Sell down your stock exposure and ramp up your investments in inverse ETFs, which rise in value as vulnerable stocks and asset classes fall. I'm Mike Larson for Money and Markets TV. Thanks for watching.